Hello everybody, in this video I'm going to be going through my entire Robinhood portfolio, which is around 20 companies, pretty heavily invested in tech, and hopefully this can help a lot of people out there get some ideas for different stock investments they may be interested in. Without further ado, let me get right into it. So here, as you can see, I'm up about 34% in the last year, but I really haven't been investing for a year. I opened the Robinhood account and added a little bit of money over a year ago, maybe a year and almost a year and a half ago, I suppose. But I really only started adding a lot of money in February and March of this year. After the overall market went down in the middle of March, I started to add several more thousands of dollars to my portfolio because there were a lot of better investment opportunities out there. My first and largest investment in my portfolio is Tesla, which is up a massive 800% in the last year. I have a whopping 23 shares of it, which is 45% of my portfolio at an average cost of $242. And it's actually kind of funny that it's at $242 because I bought my first share of Tesla at $242 last summer in 2019, when it was actually at that price before the stock split. So kind of funny that that's my average cost now. And I'm actually up 82% on Tesla, and it's 45% of my portfolio. I don't quite like that is so high. I probably won't be adding to my position for quite a while. Pretty much when there's a red day for Tesla, my portfolio is most likely down, which I don't like. So I'm probably going to be adding to a lot of my other positions on here, and not necessarily Tesla, even though I think it's a fantastic investment. Next up is Google, which is up just 23% in the last year. I have just one share, which I bought a few weeks ago, I believe, and it's just up a tiny amount at this point. But I think they're doing a fantastic job of continuing to grow YouTube. It's still growing at an impressive rate in double digits still every year. By percentage basis, and it's growing in a lot of emerging economies all over the world and gathering a ton of valuable data, which is going to make tons of money for advertisers for decades to come. Next up is Microsoft, which is one of the largest market cap companies in the world, and it's actually still up 51.2% in the last year. I have 7 shares of Microsoft at an average cost of $187, and I think one of the things that's not talked about much with Microsoft is that every year they're requiring game developers, predominantly because of they own Xbox. And gaming is a rapidly growing industry, so I think they're going to continue to do extremely well by growing their Xbox platform as well as Xbox Studios. Microsoft Studios, rather, which is the Microsoft's game developing studios. Next up is MasterCard, which is up 25% in the last year. I have 3 shares of MasterCard at an average cost of $291, and this is probably one I'll continue to add to. And cash, I think, is just becoming less and less popular year over year, and MasterCard and Visa are continuing to get a tiny fee every time one of their debit cards or credit cards gets used. So I think they're going to be able to hugely benefit from that for decades to come as well. Next up is Disney, which is actually pretty much flatlined from the last year. Not flatlined throughout the whole year, but they haven't increased or decreased compared to a year ago. But I still think this is a great long-term investment. It's just that with COVID, all of their revenue streams were halted for a short period of time, and I hoped to have a little bit of a lesser average cost. I have 4 shares at $124. I think I bought 1 share at $130 and the rest in the 90s. So I think that's why it's so high. I'm not entirely sure. But I did pick up a few shares when it was at a lower price, and I think it's still a great longer term investment. And Disney Plus is definitely really exciting for this stock. Alibaba is a huge Chinese e-commerce company, and it's up 57% in the last year. I have 2 shares at an average cost of $195, up 42% from when I bought it. And I bought a couple of shares within probably 6 months of opening the account. And this is not really one I plan to buy more of or sell this position anytime soon. It's just kind of a hold for me. But it's one of the biggest companies in China. And I think really investing in this company is really betting on the future growth of China, which is pretty much a sure thing. Next up is Uber. This has a lot of criticism because they had a terrible IPO and they're not really profitable right now. But I do think it's very likely they'll become profitable in about a year's time, which will help the stock price majorly as well as the company overall. And they're really huge compared to their biggest competitor, which would probably be Lyft, because they're in so many different markets throughout the entire world. I think their biggest profit revenue wise is actually in Sao Paulo, which you probably wouldn't expect. But I have 8 shares of Uber at an average cost of $29. I don't know if I'd pick up more just because I like my average cost on Uber, and I don't really know if I'd make a ton of money at buying in around $40, but probably just a hold on this one for a while for me. Next up is Take-Two Interactive, which is up 28% in the last year. I have an average cost of $153 and I actually picked up my first few shares at about $110 maybe, and then I picked up the other shares more recently. They are the stock symbol for Rockstar Games, which makes Red Dead Redemption and Grand Theft Auto, which is the main reason I invested in Take-Two, but they have some other games as well, like Civilization, but they make really top tier games in my opinion. They only come out every 5 or 6 years, but when they do, they're really top tier quality masterpieces basically. So that's one of the reasons I invested in Take-Two Interactive, just because it's such a rapidly growing industry and they make some of the best games in that industry. Next up is Activision, up 45% in the last year, and if you know really anything about the video game industry, you're probably pretty familiar with Activision. They make Call of Duty, and they just came out with Call of Duty on a mobile game about 6 months ago, which was pretty exciting from a growth perspective standpoint, and they want to continue to grow that. I have just a few shares of this one at $61. I think I bought into it at about $43 with my first couple of shares, and then I invested in another share more recently. Next up is Salesforce. Again, one of the first stocks I bought on here that's just kind of a hold for me. I'm up a really good amount in this position. But I have just one share at $153, and I think this is just really one of the best investments from a data standpoint, which is becoming more and more prevalent with each passing year, and they have more company data in the United States than any other company right now, I believe. Next up is PayPal, which is up 71% in the last year. I'm up 60%, and one of the most exciting things about PayPal to me right now is the Venmo, which is extremely popular in college. Pretty much every college student in the United States has Venmo right now, and as they become older, they're going to have it as well. So pretty much everyone in a couple of generations is going to be using Venmo, if it is able to maintain its current popularity, which kind of remains to be seen, but that's pretty much why I originally invested in PayPal. Next up is Tencent, another Chinese e-commerce company. I just have a couple of shares in Tencent at an average cost of $40. And just a fun fact about Tencent real quick is that they have a 5% share in Ubisoft, which is a privately held video game company, which I thought was pretty exciting or pretty cool about the company. Next up is Airbus, which is an aerospace company. They're pretty similar to Boeing, but they also make probably more aerospace products and not just airplanes. But they also make helicopters, which is pretty exciting. It can kind of be thought of as the Boeing of Europe. And I have 12 shares at an average cost of about $24, and I'm actually about negative 15% in my total return. And you're actually going to see this with several of my stocks because I bought a couple of shares before the small correction in March. But my overall cost is still pretty high, even though I did buy several more shares during the correction. Next up is Carnival, which is way down from a year ago, still down 66% from a year ago, currently at about $16. I have 32 shares at an average cost of $19.25, and I bought several shares of Royal Caribbean and Carnival as the stock price was declining, and the stock price is climbing back up slower than I originally thought it was going to, but I definitely still think that the cruise industry is going to fully recover in a couple of years. And then following Carnival, we have Royal Caribbean, which is pretty down in the last year, but not quite as affected as Carnival. And I think Royal Caribbean also is by far the best in a growth perspective. Carnival has is in a little bit better of a financial standing, but Royal Caribbean is manufacturing some of the biggest and best cruise ships in the world. I've actually made a couple of videos on Royal Caribbean if you want to come check it out. And I have 10.07 shares at an average cost of $60. And actually I have that 0.07 shares because a DRIP reinvestment fund was automatically turned on for me, which I didn't like, so I turned that off for all of my stocks, but that's why I have the 0.07 there. Next up is Advanced Micro Devices, which is one of the first stocks I started buying on Stash, which is the other brokerage that I used to use. But on Robinhood, I only have 4 shares at an average cost of $52, and they've been on a crazy run for years now, just continually increasing. I'm already up plus 48% here on Robinhood. Next up is CRISPR at $86. They're up 80% in the last year, and they are the industry leader in gene editing. I have just a couple of shares at an average cost of $53, and they're actually one of the top investments of ARK, which is one of the ETFs that I invest in, but I'll talk more on them in just a minute. This next one is Vertex Pharmaceuticals, which is up 54% in the last year, and they make the main drug for cystic fibrosis. You may be thinking there's something related to COVID, but they're not working on the COVID vaccine at all. But they're making really great headway in treating cystic fibrosis. I have just 1 share here on Robinhood at $230, but I have a few other shares in another brokerage as well. Next up is Virgin Galactic Holdings, which I would say is the most speculative out of all of the stocks in my portfolio, but I also only have a handful of shares. Just 9 shares at an average cost of $18, and I don't so much believe in Virgin Galactic Holdings by itself, although I do think it has great potential. I'm more betting on the industry being extremely successful in a decade or two from now. But this is currently really the only way to invest in commercial space flights right now, so I had to jump on board. Next up is Boeing. As I already kind of mentioned them with Airbus, but they're actually having some more problems aside from Airbus, or aside from aerospace being down. They're having some issues with their top management, which is affecting their stock price as well. But I still fully expect Boeing and Airbus to rebound and their stock to appreciate in the next couple of years. And Boeing pretty much has a monopoly in the US, and most airlines buy from Boeing, so there's pretty much a sure thing they're going to recover, and there's a lot of speculation that they're going to restructure and, open back up as Boeing 2.0, but I really don't see that happening either. And I have 4 shares at an average cost of $133, and actually 2 of those shares I bought at $91, and I think it only dipped to just below $90, so I was pretty lucky there. And next up is Jets, which is an ETF that invests in a lot of different airlines, with the biggest being American Airlines, I believe. As you can imagine, they are still way down, and I still expect a couple of the airlines to go bankrupt as a result of such bad revenues this year, and American and Spirit were already kind of struggling, so I wouldn't be terribly surprised if they did end up going bankrupt, but I am positive that the overall industry is going to recover. It's just a matter of time. Next up is Moat. I didn't mean to show the one-day chart here, but I think they're up about 55% in the past year. And this is an ETF that invests in companies that are wide economic moats. There's a lot of energy and pharmaceutical companies in there. And really quickly, if you don't know what an economic moat is, it's a company that has something that can't easily be competed against. It may be a patent or a brand or something else similar. And I have just a few shares of this one. I was just looking to start investing in an ETF, and I bought a few shares of this one before finding a better one, which I'll show in just a second. And that better ETF is ARK, which invests heavily in tech especially, but what it really invests in is innovation. Its top holdings are companies like Tesla, Square, Zillow, CRISPR, which I also invest in, and many others. But I have just 8 shares at an average cost of $86, and I just started buying into ARK about a month ago, and I've been adding to it a little bit here and there. And last but not least, we have Apple, which is my newest investment. So I started out by buying into the 2 blue chip stocks, Google as well as Microsoft, and I wanted those to be my top holdings with blue chip stocks, while not investing in Apple and Amazon. But with how well Amazon is doing and how much growth I think they still have, I think I'm going to start buying into Apple and just have Amazon be the top blue chip stock that I'm not investing in. But I literally just bought these 4 shares yesterday, and I got it just below $115. So it's only 2% of my portfolio, but I'm sure I'll be adding to this position eventually over time. If you do have any questions about the companies mentioned or comments about my overall portfolio, please do let me know down below. And I make tons of brief stock analysis videos. I think I've covered almost all of the companies in my portfolio on my channel. So be sure to come and check that out and subscribe for more content. Thank you so much for watching to the very end.